I am Steve Carlisle, and this is my take on the new EPL squad cost ratio rules, SCR rules, that are coming into force in 26-27. Just want to tell you about the rules. I've done the videos in two parts because there's a lot to it. So the first part is the basic rules, how they work, what the limits are, and so on. And then the second part is more about the controversial aspects of this squad cost ratio, because I believe that this is going to cause a lot more problems than it solves. So we'll talk more about that in part two. But just for part one, why have the EPL decided to introduce this squad cost ratio approach to financial regulation as opposed to the old PSR rules? Well, number one, they want to come into line with UEFA. So UEFA use a squad cost ratio approach for their financial rules. So clubs playing in UEFA competitions have to follow UEFA squad cost ratio rules and different rules in the UK at the moment in the EPL. So those rules will become consistent with each other. Secondly, they want to take the guesswork away. So, for example, when a club has a transgression, when it breaks the rules, we're left wondering whether they're going to get a points deduction, whether they're going to a fine, how much that fine will be, how many points they'll get deducted. And in the squad cost ratio rules, there are inbuilt penalties that are mandatory. So if you break the rules, there is an automatic level of fine that you will pay. And if you break them to a greater extent, there is an automatic level of points deduction that you will get, which we'll talk about later. And lastly, what they want to do, and this I think is the most controversial bit, is they want to make sure that if you break the rules, you get punished in the season when you broke the rules. And that's really hard. The reason it's controversial is during the season, your financial figures, the actual financial results that the rules are based on, won't actually be clear. So the EPL are proposing to work on budgeted figures, on predicted figures, in other words, with a few tweaks, rather than waiting for the actual figures, which won't be published until after the year end. That's after the end of season and after the company's financial year end. Just as a little thing to know, most companies have a financial year end for accounting purposes of the 30th of June, which ties in with the football season. Their accounting year starts on the 1st of July and ends on the 30th of June. So it encompasses the whole football season. And we'll talk more about that later. Okay, so that's why the rules have been introduced. Let's have a look at what the rules are. And actually, there are two bits to this. So the squad cost ratio is one part, and that is the most important part. I'll come back to that in a second. But I also need to mention that there are rules called the sustainability and systemic resilience rules. Bit of a mouthful. Those rules are less important to us as football fans because they're about the long-term survival as a legal entity of the organisation that owns the football club. So they're all about what the liquidity of the football club. And these rules don't have a financial penalty if you break them, a preset one, and they don't have a points deduction if you break them. So what the EPL will do with these rules, we're just reading between the lines, is they'll go to the clubs when the clubs don't have basically enough money to see them over the foreseeable future. So where they're running short of cash, the EPL will go to the club and say, look, you've broken these rules. These rules are based on three accounting ratios that we can calculate, which tell us whether a club is in danger of becoming insolvent. You don't need to worry about the detail of them. But the EPL will get these ratios calculated. And if their clubs are in breach, they'll go to the clubs and they'll say, look, we don't think you've got enough money to see you over the next few years. What we suggest you do is put some more money in. Either you borrow the money from a third party like a bank, or you, as the owners, lend money to the club, or you, as the owners, the preferred option, I suppose, would always be that you put the money in as extra share capital. So you put it in as extra equity. So that will work sort of on a partnership basis between the EPL and the clubs, as far as I can see. So that's less important to us as football fans, because what we're worried about is, when are we going to get points deducted in the main, and or when are we going to get fined? So the squad cost ratio rules are the key element of this new regime. So let's have a look at what those rules are. So first of all, what is this ratio? What is the ratio? What do we mean by the squad cost ratio? Well, the squad cost ratio is basically a fraction. So you take one figure, squad costs of players' wages, basically, plus a few other bits, and divide it by the revenue, the amount that you own from football sources. And that will give you a fraction or a decimal. If you put that into your calculator, it will give you a decimal. And then if you multiply that decimal by 100, basic GCSE maths here, for those who remember, that will give you a percentage. So take one figure, divide it by the other, and then multiply it by 100. That gives you the percentage, okay? And the figure that goes on the top of the squad cost ratio are the players' wages, and that includes everything. One of the big element of that would be bonuses for appearances, for goals, and so on. Plus the head coach's wages. Now that's interesting because it's not the assistant coach, it's not the medical team, it's not the physios, just the head coach's wages. We'll talk more about that in part 2 of the video. Plus the amortized player cost. Now, those of you who knew the PSR rules would have been familiar with this. This is an accounting term and an accounting idea. This basically, if you buy a player for £50 million and that player's got a 5-year contract, what you would put in your financial statements in your profit and loss account is 1/5 of that £50 million. So you'd spread the 50 million over the contract of the player, the contract length. So 50 million over 5 years is 10 million a year. So for your squad cost ratio for 2026-27, if you bought them in that year, then you'd put 10 million on the top for this year, then 10 million for next year, 27-28, 10 million for 28-29, and so on until you'd got 5 years and that cost had been spread. So we talk about amortized player costs. When we buy a new player, we spread that cost over the contract period. Now, there is a limit here. The maximum period you can spread over is 5 years. So if you've got a player with a 6-year contract, tough, you spread the total cost over the maximum of 5 years. And if you buy a player with a 3-year contract, you just spread the total cost over 3 years. So each year, a third will go into the top of the squad cost ratio. Okay, so that's what goes on the top, basically. By the way, agents' fees will also go on that top figure as well. And then on the bottom, you've got the revenue that you earn from football sources. Now, to be fair, most clubs' revenue that appears in their profit and loss account in the financial statements, that top figure, revenue, sometimes they call it turnover, it means the same thing. The figure at the top of your profit and loss account, for most clubs, the bulk of that figure is the football revenue that the club gets. So, for example, Arsenal, as a little example, they get somewhere over 700 million they're going to get this year. So actually predicted 730 up to 760, depending on how they do in the Champions League this year. And that's the revenue figure. The vast majority of that is from football sources. They have, I believe they have a property development arm as well, which might add a couple of million in there. But the bulk of that is from football sources. So the bit from football sources would go in the bottom, which, as I say, for Arsenal would be the bulk of that revenue figure that appears in their profit and loss account. Okay, so you divide one figure by the other, and then you get this percentage. Now, the maximum percentage you can have is 85% for any club that's not in a UEFA competition. If you are in a UEFA competition, it will only be 70%. Why? Well, 2 reasons. Number one, UEFA's squad cost ratio maximum is 70% for anyone playing in a UEFA competition, and they can fine you if you go over that level. So it's consistent with UEFA. And if you're in a UEFA competition, you will get more revenue automatically. You'll be playing more games. There'll be more prize money that you'll be paid. And so that will all add to the figure on the bottom, meaning you can get away with a lower ratio. But remember as well, you'll also be adding some cost to the top because you may need extra players or better players in order to be able to compete. So you may need a bigger squad there. Okay, so there will be some addition to the top, but the main addition will be to the bottom, meaning you will have a lower limit. This won't be a problem for big clubs, you know, like a club like Arsenal. Just think about that. 700 million, let's just say they only made 700 million as revenue. That would still give them 70%, which is 490 million for that top figure. And if you think about it, 490 million, I've just got some figures down here for Arsenal. Apparently their average player cost is 10 million a year per player. Now, even with a squad of 30 players, that's only 300 million out of the 490 million they'd be allowed to have on top. So, you know, easy for a club like that. Now, think about a club like Bournemouth, though. So Bournemouth going into your UEFA competition, their revenue is currently 180 million. Now, of course, it will be boosted by being in the UEFA competition, but at 180 million, I've just written down the figure here, worked out their current squad cost ratio, because they weren't, if they weren't previously in a UEFA competition, at 85% would allow them to have 153 million, sorry, for player costs. But if they go into UEFA competition with only 180 million, that player wage cost would come down to 126 million, which would actually exceed their current squad cost, as I believe, just doing my little bit of research there. So tricky for clubs that go into Europe one year, maybe not into it the next year. Their ratio will be flitting from an 85% to a 70% ratio. But anyway, that's how it works. So as a little example of just a little calculation for you, let's say your player costs were 155 million and your revenue was about 200 million. So a club just a little bit bigger than Bournemouth, say, at the moment, that would give you a 77.5% squad cost ratio figure. And that would mean you were compliant if you were not in a UEFA competition, because you're below the 85%. If you're in a UEFA competition, unfortunately, you wouldn't be compliant. So that would be a problem for you. And on the next slide, I'm going to show you how big a problem that might be. So let's just move this on. So this squad cost ratio rules, there are actually 3 limits. So I've talked about the basic limit, 85% if you're not in a UEFA competition and 70% if you are. If you reach those limits or you're below, so 85% exactly is fine, 70% exactly is fine, you're okay. You're consistent, you're compliant, and you will not be fined, and you will not have a points deduction. Fantastic. Okay. What if you go over that? Well, there's a little bit of a safety valve zone, if you like, called the amber zone. This is like a traffic light system they've got here. So the amber zone, if you're from 86 to 115%, if you're a non-UEFA competition club, that 30% margin between 85, 86% and 115%, if you're in that zone, then you will just get fined. And the level of fine is automatically calculated. It's like a formula. And the formula is the percentage that you go above multiplied by the pound notes that you go above the limit, the basic 85% limit. So it's a preset formula. Don't worry about it. But what it means is the EPL has no autonomy to actually decide the level of the fine. It's already built into the formula that I just mentioned. Obviously, if you're in a UEFA competition, that 30% limit is between 70, 71% and 100%. So that's the fine limit. You only get a fine if you're in that little zone. Then there's the red zone. Now, if you go above 115% for a non-UEFA club or above 100% for a UEFA club, then you're in a points deduction territory. And again, this is automatically, it's written into the rules. So as soon as you step over that limit, so if you go to 116%, sorry, if you're a non-UEFA club, 116%, 6-point deduction automatically. And then it goes up by an extra point deduction for every 6.5 million quid above that you are. Okay, that 6.5 million will probably change in future years as we get inflation. But at the moment, it's for every extra 6.5 million that you go above breaking the basic limit, you get an extra point deducted. So it's all set. It's a formula. And obviously for a UEFA club, then it's when you step over the 100% that the points deduction starts. So they're the limits. And by the way, we speak more about this in the second video. This is a 1 year, one time hit. None of this old PSR stuff where things were averaged out over 3 years. If you break the rules this year, then you get the penalties this year. And the other thing that's strange about this rule is that amber zone won't always be 30%. So if you dip into the amber zone 1 year, let's say you go 5% into the amber zone, next year, your amber zone will be lower. It will be 5% lower. So next year, your amber zone will go down to 25%. And if you go 10% over next year, your amber zone the year after will be down to 15% until all of that amber zone is used up. So once you've used up all of the 30% amber zone, it won't exist anymore. And you'll go straight from green into red. So you have to be careful with that amber zone. You don't get it renewed every year. It doesn't reset itself to 30%. So once you use it up, you might be asking, can you get it back? Yes, you can get it back, but getting it back isn't as straightforward as it might seem. You get it back by being under the green limit, but it's not as logical as you might think. I'm going to leave that till part two. You might, just as a little bit of a teaser, you might want to have a look at part two just to see how that works. I've got a good example in there. Okay. So just to finish this first bit, I've got a little example of what clubs will be doing right now. I'm recording this in May 2026. So as I said right at the beginning, most clubs' financial year end is the 30th of June. So two things will be going on now. Clubs' accountants will be furiously working to make sure the year end figures are all right and ready for the auditors. Obviously, we've still got a few weeks to go until the end of June. But not a lot's going to happen in that period because we're then going to have to wait for the transfer window and all the big stuff will happen. So they're working on the year end to get the accounts to the auditors, but they're also doing the budgets for next year. Now, budgets will be a budget for next year's full profit and loss account, and within that, what we're interested in as football fans is they'll also be budgeting for the squad cost ratio for next year. And this is a really important thing for the new rules, this budget. I'll explain why in a second, but just bear with me. This is what's going to be going on. The club will be drawing up its budget for its next financial year, which is the year from 1st of July 26 to the 30th of June 27. So the 26-27 year, as we call it. Okay, so it's drawing up its budget. So what it will do is it will work out what it thinks its revenue is going to be next year. And that will be based on basically what's happened this year and the year before. Assuming we're an established club, of course, for new clubs that have just come up, things will all still be in flux. We'll have got a big boost in revenue if we've just come up, like Sunderland and Leeds, who are staying up. So they will be thinking about, well, will we be able to earn as much next year as we did this year, or will we be able to earn even more? Will we rise up the ranks any further next year and get more prize money? So their budget for revenue will be a bit more difficult. But the established clubs like your Manchester United, your Liverpools, and I was going to say Chelsea, but maybe not. But those more established clubs will have a pretty good idea of what their revenue is going to be because it'll be fairly consistent. So they'll budget for it. Now, that 200 million is a club, as I said, just using the Bournemouth example, it's probably just a little bit bigger than Bournemouth in terms of its revenue. So I'll say this is what we think our revenue is going to be, all things being equal to what's happened this year. And then it'll work out its squad costs and probably what the accountants will do because they're not, directors of football or whatever. They'll say, well, assuming we don't buy any more players, assuming we've got the same squad as this year, this is what our squad costs are going to be, 150 million. Okay. And they'll then work out the squad cost ratio, which those of you who are more mathematical will know is 75%. 150 over 200 multiplied by 100 gives you 75%. Okay. So if we're a non-UEFA club, that will mean we're compliant. So let's assume this fictional club we're looking at is non-UEFA. That makes us compliant. But also, if you're a director of football, you'd be looking at that going, right, that gives us a bit of leeway. That gives a bit of scope to go and buy some new players. It gives us a bit of scope to maybe increase somebody's wages by giving them a new contract. Maybe somebody's contract's running down. We can give them a new contract at a better rate and maybe keep them with us rather than having to transfer them. Okay, so the club will be looking at that and saying, well, yeah, it gives us a bit of scope, a bit of leeway. And that's when the directors of football will come in. They'll know what they are allowed to spend roughly. So, for example, if I just flick that forward, if you added 20 million to your squad costs, that would put you bang on the 85%. So that 20 million, just think about it from what we said earlier. If we bought 100 million pounds worth of players, all on 5-year contracts, 100 million over 5 gives us 20 million a year. That would add 20 million to next year's squad costs, which would take us up to 170 over 200, which is exactly an 85%. But I've forgotten there, haven't I? We're also going to have those new players' wages in there as well. So that's a problem. So we couldn't spend up to 100 million. We'd have to spend slightly less. So this is the sort of thing that clubs are having to think about, having to struggle with to balance this up to come up to the 85%. And of course, just bang the last bit up, there are other things we could do because we could sell players. Yeah. And that will be part of our thinking. Now, when you sell a player, it's actually a little bit more complicated because when you sell a player, the revenue that you get from selling the player can be added to the bottom, but not the full amount that you sell them for. More of that on video too. It's a little bit more complicated than that. But selling a player, you can add some of the sale proceeds on to the revenue figure at the bottom, and that will change your ratio again. So there's a lot of tweaking that'll be going on at the moment with clubs. And this is the really, really important bit for why I think this is going to be a bit of a nightmare for the EPL. What the EPL are going to do is they're going to ask clubs for their budgets, for their squad cost ratio budgets, before the start of the season. And they're going to want from clubs budgets that show where they're going to be, what their ratio is going to be. So the clubs are going to submit those budgets. And I'm assuming, well, I suppose some clubs might decide, okay, we'll dip into the amber zone, but no club's going to say we're going to dip into the red zone, are they? Yeah, but they might decide to take a financial hit by dipping into the amber zone in this first year. But they're going to submit those budgets. And then what's going to happen, and this is the really strange bit, is on the 1st of March 2027, the EPL are going to do their major review. Now, bear in mind, the 1st of March 2027 is only 8 months after the 1st of July 2026. It's only 8 months into the 12-month financial year for each club. They're going to look at those figures on the 1st of March, the original budget, plus the clubs are going to be able to tell the EPL whether there were any major mistakes in there, any major things that they've now discovered in their budget that weren't correct. Plus, they're going to add the impacts of the January transfer window. And the EPL is going to use those adjusted budget figures to decide whether to fine them or to deduct the points. They're going to use those figures from the 1st of March to deduct points if you're in the red zone. And those figures are only predicted figures for the last 4 months of the year and probably actual figures for the first 8 months of the year. But even those actual figures won't be audited. And clubs could end up facing a points deduction in 26-27 and every other year based on that assessment on the 1st of March. And that is the bit of the rules that I really just don't get how that's going to function. Anyway, more of that in part 2. I'm Steve Carlisle. Hope you enjoyed that and learned a little bit from it. Have a look at part 2. But thank you for now and goodbye.